Welcome to Money Talk Viewpoint, the podcast for financial professionals, CPAs, attorneys, wealth managers, and trusted advisors who work with high net worth individuals and family offices. My name is Stuart Kruse. I'm founder of Kruse Asset Management, and I'm a TED speaker, and I have a book coming out called License to Steal: How to Turn Wall Street Greed into Your Gain. I'll be your host today on Money Talk Viewpoint. And for those of you who are not familiar with Kruse Asset Management, we're a boutique asset management firm. We are quantitatively focused, and we run a virtual family office. And for those who know what a family office is, it's when a family has so much money, they hire a team of professionals to manage their assets. Now, most people don't have the $500 million or $1 billion it takes to have a family office. So we have a virtual family office where we work in a team-based approach with your CPAs, your other trusted advisors, to proactively look at some areas of opportunity for your finances. We bring in national experts to help solve and take advantage of these areas for you. And you can do all this without the payroll of having your own family office together. Areas like premium financing, buying and selling your business, captive insurance, reducing your tax, advanced estate planning, and the like. If you want to know how a virtual family office might be leveraged for you, let me know and reach out to me on the information you see below. Okay, so enough about me. We're not here to listen about me. We're going to have a great show for you today. And it's all about a very topical piece of topic, not to be redundant, but we're looking at what are the impacts of sustainable energy. What are the impacts of renewable energy? And our guest today, Brian Jones, who's managing partner of Windmill Capital Management, is focused on creating a positive global impact with clean and renewable energy. Brian is a former tax accountant, investment banker, and CFO of a public company. Brian, welcome to Money Talk Viewpoint.
Thank you, Stuart. I appreciate the time and opportunity to share our views on the marketplace.
Yeah, I'm looking forward to this. I'm excited. I hear from a lot of my clients and people in the industry about this type of investing. And really what we hear about, and I'm curious about your take, is we hear about ESG investing, environment, social governance. We hear that term more in the media. Tell me how it relates to impact investing, or just tell me what impact investing is.
So impact investing often gets associated with and sometimes confused with ESG. ESG really is a measurement tool that's used to evaluate investments in several non-financial aspects, as you mentioned, the environmental, the social, and the governance. And typically, ESG is associated with publicly traded securities, at debt or equity securities. More often, sustainable investing or impact investing is associated with private investments where there are specific outcomes, impact outcomes, typically environmental or social outcomes that are expected from those investments. And it really is a timely topic and an exciting topic. The impact investing market, it really is experiencing a whole confluence of changes that are really exciting for investors and really exciting for us. So it's always interesting to talk to folks about how their own journey toward impact investing and where it fits within their overall family strategy. It's also thought of in terms of value-based investing, where particularly high net worth individuals and family offices can, quote unquote, invest their values. Like I said, there's a lot of changes happening in impact investing, which are very exciting for the space, and I think are going to, as a result, we're going to see a lot more interest and capital flowing in towards impact-oriented investments.
Yeah, absolutely. Now, I know from a standpoint of my firm, where we do a lot of work, obviously, with public companies, but you made a big distinction that impact investing tends to be more private equity focused, or maybe it's debt as well. And a lot of our clients that might be portfolios of $2 to $10 million, they don't necessarily have access to some of these opportunities that, let's say, a family office might have access to. So can you tell me a little bit more about like why you think it's growing in such popularity in that space? And maybe it's growing, in the high net worth space too, but talk a little bit more about, that focal point.
Well, I think overall there's greater awareness. As you said, ESG has become a huge vehicle around which capital has been raised. ESG has its own sort of issues, lack of definitions, lack of measurement, and things like that. But I think the trend overall is towards greater awareness of the types of investments that we're making beyond the financial outcomes. And so that, for the average investor, the Main Street investor, if you will, there's still plenty of opportunities to invest in impact. There's impact comes in a whole bunch of different forms. There's microfinance, there's investments around education, there's investments around workforce housing, those types of things that are all accessible to most investors through their financial advisors. But again, they tend to be more private structures that they have. Our own focus within impact is renewable energy, and our fund is oriented towards higher net worth individuals, family offices, foundations, endowments, et cetera. But there are more and more opportunities for investors of all types and capacities to invest in impact. And I think that one of the best things that we're seeing out of impact investing is managers have better ability to measure and report on that impact. And I think that that's an important it's an important aspect that the adage is, that nothing's important unless you measure it. The measuring what that impact is, and being able to report to investors exactly, whether that's in terms of greenhouse gases eliminated, carbon dioxide emissions reduced, jobs created, education, educational outcomes, low-income community outcomes. All of those different things can be more accurately measured, meaningfully measured, and reported to investors. And I think that in addition to greater awareness is, are two of the leading factors in why this is becoming more commonplace, more popular.
Yeah, it seems to me like there's a big shift in the investment language, if you will. Like when I was growing up in this industry, before I had all the gray hairs that I have now, it used to just be all about shareholder maximization. Like that was what it was coined. And if you kind of study this, and I wish I really studied this a little bit more intensely, but at one point somebody said that was the goal of any company, was to maximize its own shareholder value, and then everybody else would take care of itself. But now it seems like there's a shift, at least in some circles, where it's not just shareholder maximization. You need to maximize the stakeholder value. So even if the person doesn't own share in the company or in that investment, but they are affected by the investment or the company itself, they are stakeholders in that company. Like maybe they're downstream from a water source, or they're around the air, or what have you. So I think there's been a palpable shift away from just that myopic shareholder value investing and optimization, right? Have you seen?
Yeah, I think that's absolutely right. We're definitely seeing more of that, and a lot of it is because it's in the past it wasn't effectively priced into a company's operations, and increasingly, and climate change is a great example of that. Companies committing to zero carbon or carbon neutrality, those costs those indirect costs are being priced into companies' business models, and that's in part what's driving, again, that awareness and the measurement and that that broader stakeholder outlook, as opposed to just who are the owners of the company.
Right. So you touched on this a little bit. You hinted at this, being able to measure specific criteria that are not normally on the balance sheet of a company, right? But I looked at Windmill Capital's website, and I see it says you're addressing 16 of the 17 United Nations Sustainable Development Goals. So can you give me some examples of, like, very specific examples of what impact investing strategies you've been using, or some of the companies you've been working on investing in, and some of your brightest spots?
So we are an investor in commercial scale on-site renewable energy assets, which means that we help companies typically finance on-site energy production, which is cleaner, cheaper, and more reliable than utility provided energy, and to benefit from that on-site energy production, essentially on a pay over time type of model, where they're paying for the energy, whether it's electricity or thermal energy, and they're paying for that over time. And so we're enabling the growth of renewable energy by providing that financing, through our ownership and then sale of the energy, and the benefits. The United Nations Sustainable Development Goals cover a whole host of things, from water conservation, which we see particularly in people are unaware generally of how much, particularly in building heating and cooling, how much water is utilized, because you're typically using evaporation chillers in traditional heating and cooling, and alternative energy, including geothermal, can eliminate virtually all of that water evaporation. So it's preserving accessible water for human consumption and agricultural uses. Another of the SDGs relates to of course the environment itself and climate change, and we all know the benefits of renewable energy towards climate change. The SDGs relate to education, and again, we work with renewable energy developers that are focused, in some cases exclusively, but at least partially, in providing renewable energy for schools and colleges. And I was unaware of this fact until recently, but our public school system represents, I think, the third largest investment in city, state, municipal owned facilities in the country. And so our ability to provide cleaner, cheaper, more reliable power, heat for those facilities means that there's more resources available to actually educate kids, instead of operating those facilities. So things like that to me are super exciting. I look at my own kids' education experience, and there's a constant struggle over funding for education. It doesn't matter where you live. It doesn't matter the community, the state, the level of education. There's never enough money for it, and we feel like we can make a big difference by making a little difference a bunch of times, right? So one school doesn't mean a whole lot. 2 schools may not mean much more, but a dozen schools, 100 schools, 500 schools, 1,000 schools, we really start to move the needle. And that is, that's that collective, working collectively to make to create a substantial impact. And that's And it's things like that to me are really, really exciting, and it's gratifying to work with folks that are that have dedicated their careers 30, 40 years to these types of things that are now just now getting more attention in the marketplace, more recognition for what they are, and overall it's just important to remember that climate change affects lower income households, communities, and countries more than it does wealthier communities. So, virtually everything we do on impact has a beneficial, a beneficial effect for even if it's indirect, for low income communities.
Yeah, so that's great. I mean, I have 4 kids in public school right now, so that's great to hear about the public schools, and obviously an altruistic endeavor